welcome back to my YouTube channel, and I hope all of you are doing great. So I'm making a video after almost 2 months. And first of all, I would like to apologize for that because I haven't been making regular videos, and this video is coming after such a long time. And the second thing is that I've been a bit busy, that's why I wasn't able to make a video. And plus, the market also has been a very choppy in this stage, right? So today's video is just going to be a general overview, my opinion on how you should approach the market during these times, and what could be happening over the next few months, and how I'm approaching the market and how you guys can approach the market. So I'm going to just do a general overview of the overall market, and the second thing is going to be like we'll look at some stocks that are interesting, maybe a few interesting investing opportunities as well, right? And we're going to overview the market, like the indices and all those things. So let's get started with the video. And just before that, disclaimer: I'm not a SEBI registered analyst, and any stock discussed here is not a recommendation. Please consult your financial advisor before taking any trade or making any investment. So let's get started, right? So let's start with the Nifty 50, right? So as you can clearly see, the Nifty 50 index is currently in a downtrend, and it has slipped below the 200-day moving average. So you'll see multiple lines here, right? So this white one is the 200-day moving average, this green one is the 50-day moving average, this orange one is the 21-day moving average, and this blue one is the 10-day moving average. So as you can clearly see, the currently the price is below all the moving averages. That is a clear sign of weakness, right? First of all, as you can see on the top, it made a head and shoulders pattern, right? And then it went down. There was a bit support that it took on the 200-day moving average, bounced up, and then again going down. So you see, this action has been happening after a very really long bull run. And if you have been in market for some time, then you must have seen this phase as well, the phase of year 2020 till 2023, and you must have seen how difficult it was to make money during those times because the market was very choppy. As you can clearly see, after a really nice bull run, the market topped here, went down, again retraced up, again went down, again went up, again went down, and so on, and it stayed choppy for quite a long time. And after another bull run, the similar thing is happening right now as well, right? But again, indices are not a really good uh, picture. Indices don't really give a really good picture of the overall market condition, because if you look at the stocks individually, many of them have corrected 30, 40, and even 50%, right? But indices haven't corrected that much, so it doesn't give a clear picture of how the market is doing. So one thing is clear: market has been very choppy for quite a long time now, from many months, and I expect it to remain choppy for quite some time also, right? And if you look at the other indices as well, if you look at the bank nifty, so I had drawn this upward ascending channel because the price was following this range, and recently it has broken the channel and it went down below the all moving averages and all of that, right? So again, if you look at the individual stocks, many of them have corrected a lot, especially if you look at the micro caps, this microfinance space, right? You can clearly see one of the best performing stocks from this sector, that is the microfinance, this Arman Finance. You can clearly see it is down more than 45% from the peak. Currently it's showing a bit of the bottom, that too around the previous area where it has taken support earlier, and kind of showing a bit of a reversal, right? So again, it's like too early to judge anything, right? Because the market was a bit better today as compared to the last few days, that's why it's going a bit up, right? But you are getting my point, is that indices are not showing the clear picture, and you can clearly see many of the stocks have corrected a lot. If you go specific by the sector, if you look at the let's say defense sector, see, these were the top performing stocks. Masrock is still doing okay as compared to the other ones. If you look at Cochin Shipyard, so it has corrected somewhere around 50% from the top. That is a 48%, like 48-50% kind of correction. If you look at JRSC, again, it has corrected a similar amount from the top. And if you look at the another sector, that is the railways. that too has corrected a lot. And recently, if you have seen, if you have been active in the market, you'll see the solar EPC space and the overall solar space has also corrected a lot from the top. If you see, the stocks have been down 40-45% easily, right? You can clearly see that this has been going over the across the market. Even if you look at the auto sector as well, this is another sector that is currently showing weakness. Many of them have corrected a lot. You just look at the Bajaj Auto, it retraced the entire up move. So currently my take on the market is that you have to be very selective. Now the focus, like, it's not a market for a swing trader at all. So if I disclose personally, I haven't been trading for at least a month. I haven't taken any trade for at least a month because frankly this is not a market for a directional trader, especially a swing trader, directional trader, trend trader, right? So if you have other skills, like if you are really good at with the you are if you are really good with the IPO basis, right? So there have been many good IPO stocks that have given good moves. If you're able to capture something like this during this area, if you were able to capture something like this, or if you were able to capture something like this, right? So then well and good, because if you can shift your style according to the market situation, that is a really good thing, right? But if you weren't able to, then it is not a market to jump in right away, right? You can do the intradays, because there have been days when the market has corrected a lot, market has went up a lot. Like today itself, many stocks went up a lot as compared to how the market has been from last few days. And some IPO bases have worked wonderfully well. You see this war energies during this phase and this phase as well, right? And if you look at Afcon's infrastructure during this phase, like, so if you can shift your focus towards that, you look at Black Buck, just look at how beautifully it moved up, right? So if you are good at adjusting your style according to the market situation, then well and good. Otherwise, my advice would be to better stay away from the market during the current phase, especially if you are a trend trader, if you are a positional kind of a trader, or if you are a swing trader, then this is not the market to jump in right away, right? Second thing, what you can do is you can look at the undervalued opportunities, something like Bajaj Finance, which haven't really performed well over the last few years. If you see stocks like these, like Bajaj Finance, you might say this is a large cap and it might not move that much and all those things, but there are phases when the small cap performs better, when the mid cap performs better, when the large cap performs better. So this could be a phase, because if you see, the earnings have been growing consistently. If you just add an element of the earnings, you can clearly see the earnings have been going up consistently. The valuations have come down. And even if you add the technical element, you can clearly see it has been doing just nothing. It has formed a range, and it has been consolidating in that particular range from a very long time. So just imagine, when the earnings have been continuously going up, right? The market has been very choppy, and there are not many stocks where people are interested to put in their money, and your FII has come back. Then what happens is that some opportunities like these, they give you exceptional returns in a very short span of time. And this is not like this is happening for the first time, right? It has happened before. There have been phases in the life of these stocks where they have done nothing for very very long time, and then they go up a lot in a very small span of time. Another interesting thing is that what you can do is you can look at the few mutual funds as well. Like if you see something like a micro cap index, right? So if you just search Nifty micro cap, like a Nifty micro cap index, micro cap 250. So there's a Motilal Oswal index fund, like not a recommendation, but and you can clearly see the PE ratios and all, like uh, so it is currently at a good point, right? You see the PE is below the mean PE of 28, right? And whenever the index corrects a good amount, like somewhere around, if it reaches somewhere around 20,000 or so, that could be a good opportunity to go in with the lump sum in the mutual fund as well, right? So but these are just multiple ways you can make money. You can try to make money in this choppy market, right? And my take would be, it's better to stay away going in, like jumping in daily, right? There are some interesting stocks like this, Jindal Drilling, which have been consolidating in a range that might come out from this range, then it can go up, like APL Apollo Tubes. All these are really well fundamental companies which are really well, but they haven't really performed well over the last few years, like 2 3 years, especially after the COVID. And plus the euphoric phase of the market is especially over right now, right? So there are very less opportunities. You have to be very selective. My take would be, just don't jump in, don't trade unnecessarily, because a death by thousand cuts is also possible. That means you keep on accumulating small losses, and in the end you'll have a very big loss. Maybe you are not uh, having big losses right now, right? That is a possibility. But again, if you're taking a trade, if you're taking compulsive trades, then there's a very high uh, possibility that you might end up with a big loss. So my take would be, take things slow these days, just focus on the good stocks, try to go in with a little bit of fundamentals. If you are good at, if you are good at like uh, other ways of trading as well, like the IPO trading or something like intraday, then sure, you can do that. But overall, my take would be, take things slow and just focus on the market. Plus, there's a big event also coming, the budget in February. So that may also decide the direction of the market, what the market expects from the budget. And second thing is, like, FIs are still not in the favor of India or the our Indian market, right? So that is something that you need to take a note of. So when all the factors combine, because again, the market doesn't last in a single stage for a very long time. There is a bull stage, there is a bear stage, there is a consolidation or the sideways stage. So market doesn't stay in a particular stage for a very long time. So that is something that you need to take in consideration. The time will change, the good market will come, the bad times will be over. And that is the point where you need to have raw power, that is your cash, where you can jump in the right opportunities. So just focus on collecting those right opportunities. This is not a time to go aggressive, this is a time to stay quiet and just focus on few particular opportunities. So that is it for today's video, and sorry, I will try to make videos more regularly. It was a very long break, and I hope you guys were able to save the money. And if you were able to earn it, then that's even better. But at least if you guys were able to save in during this time period. Okay, goodbye guys, see you. I'll see you in the next one.